What's going on, everybody? Paul here, coming at you with a crypto coffee update in the flesh. It's a little late. This is kind of why I had to get all this newfangled technology set up. Second monitor over here with all the stuff, recording software here. You guys are there. I'm right here. I'm liking this so far. It's pretty cool. Let me know what you think of this below in the comments. We're going to change up a little bit of stuff. Maybe you can see right here is where all the article is going to be. We're going to run through that together, not just look at pictures, which is nice. That way I can kind of show you how I do my own research, how I aggregate this information, and it'll make it a bit more casual, more, I guess you could say, deserving of a casual sip of coffee together with your buddy Paul. Simultaneous sip. Let's do this. That is good stuff. That is good stuff. All right, let's go ahead and check out the news of the day. As said, the format switched up. Check out the actual articles before getting back into the conferences where my big head will float away into the beyond until we meet again. So 13% of ICOs have a running product, which is, that's a low figure, just kind of small, and that's according to EY. EY, great source, Ernst & Young, they do all kinds of market reports, including things like emerging markets, oil and gas, mining, all kinds of stuff, and crypto, as is apparent. Just wanted to mention Crypto Globe since they are the source through which I found the EY report about crypto. So what we're going to do is we're immediately going to jump over into the report itself, doing my own research, guys, checking behind the actual sources that were shared to make sure that they say what is being said that they say, if that makes sense. So yeah, just checking behind folk. Let's go ahead and unpack this EY report. Itchy nose. All right, so a couple slides I found relevant. Slide number 4, really great. This kind of attests to exactly how information is intaken, how data is then sussed out after it's intaken and displayed to the individuals in nice formats like this. Take a look. EOS 2018, $4.2 billion. Telegram, $1.7 billion. And then you have the Petro. That kind of raised a, little guinea pigs behind me, kind of raised a little red flag for me. It was like, hey, all right, if you guys have been paying attention here on Cryptide, you may be aware that the Petro is Venezuela's national cryptocurrency that they released, but they maybe released it, maybe they didn't. Okay, merchants on the ground, they're saying that they don't see anything related to this national payment system. However, it's also some additional technical discrepancies have emerged, like being launched on the NEM Mosaic, or, well, okay, no, maybe being launched on the Ethereum network. Maybe it's a clone of Dash. See, there's all kinds of speculation when you look under the hood as to what kind of Frankenstein this system is, and they change it pretty regularly. Couple that with the fact that merchants on the ground haven't seen anything according to them. One has to wonder if the figure $735 billion is even accurate, given that the Venezuelan government is the entity that reported said figure, and it seems that it's been taken at face value by EY. That's neither good nor bad. Like I said, at some point you have to stop intaking data, and this kind of research is it's a costly, time-based endeavor. So for instance, if you're going to vet every source and make sure that this is a legitimate figure, it's good, it's corroborated by multiple sources, it's logged on the chain, we can check it out, it's legally airtight, that's going to decrease the breadth of the overall search you can do. Maybe you can only really intensely vet 50 sources, whereas if you only kind of casually vetted them, maybe you can get 500 sources and give you more accurate data. So just different methodologies of approaching how you aggregate this information, and an interesting point that I wanted to drive home for you guys, since after all, we're all in this together, learning to be better researchers, better learners, get better edumacated, as they say. Let's go ahead and check some of these other slides, guys. Boom, idea. 71% are still in the idea phase. Another important thing I wanted to highlight for y'all. What does that mean? The definitions are very important, and luckily they were able to put these little asterisks here to let us know how these are defined. Let's start at the bottom. Actual finished, good to go, rolled out products. When I think of this, I'm thinking of Pundi X. There's a good example. They have a point of sale system. Just swipe your card, boom, you're good to go. You paid for your stuff. It's a crypto project. It's physical. It's in the hands of retailers. And yeah, that's a working product. And it's defined as the beginning of product sales. Next, we have the prototype section, which accounts for an additional 16%. That's defined as the beginning phase of product development that's providing testing, models, and validation. I hear testing, I think test nets, right? That makes sense. So if you have a test net, then you're within that prototype phase where you have something that is a semblance of what the end product will look like. Again, 71%, they don't even have that. That is a huge number, guys. That is a huge portion of the ecosystem that just raised, assumingly, millions, at least hundreds of thousands of dollars, and they don't really have anything but pie in the sky to show for it. That's pretty rough. But suffice to say, this is just something I wanted to drive home and demonstrates why doing your own research and vetting your own projects is so important. That and listening to professionals who you trust, but checking behind them as well. Don't want to get into it too big, but there was an individual who's saying doing your own research is kind of a sham because it assumes that people have the capacity to do their own research to begin with. Well, that's something that we here at Cryptide are trying to help to fix. If you're not familiar with how to do your own research, hopefully the Crypto Coffee updates can help to empower you with maybe some ideas about how to approach this yourself, maybe some new methodologies. And of course, we have the Discord. So if y'all have any questions, jump over there. Be happy to chat. All right, another slide that I found interesting. Oh, there it is. Detokenization. This is super relevant and super applicable. DigiPulse and ICO is a crypto inheritance service. They said they're not using their token anymore. Why? Because it doesn't align with their actual business interest, assumingly. You see 7 out of 25 reviewed projects, they're using other currencies as well. Let's take an example. Let's say that you have a user base that's pretty savvy and maybe you work in technology. Maybe they're familiar largely with cryptocurrencies. Let's say even a super high figure, like 68% of all of the individuals who interact with your business, they know about Ethereum and they're comfortable using the network. Well, maybe only 50% of those actively use the network for anything beyond just simply speculating and investing in the Ethereum token itself. Well, that means that they're not going to have this familiarization with the actual Ethereum ecosystem at large, meaning, perhaps they don't want to use the token. Maybe they just want to use their card and get those sweet 2% cashback rewards, according to Bitcoin Core. Maybe they just want to use cash in hand instead of using the token. Point of the matter being, it limits the overall scope of applicability, and that could mean that you're receiving a negative return on investment for creating this digital ecosystem to begin with. Perhaps just creating a private database would be more worthwhile and economically viable. But suffice to say, this just goes to show and drives home that we're in the discovery phase still. Largely, this market is young, this technology is still relatively new, and individuals are feeling out and practicing to see whether this is applicable, this new distributed ledger technology, if it's applicable to their business and perhaps even their wider industry. So really interesting stuff. Great report coming out of UI. Always love their stuff. Definitely worth checking them out in my opinion, but as always, do your own research. They can help you out with that. This is really the bulk of what I wanted to drive home. As said, we're changing up the format a little bit. Now we're just going to glaze over a couple articles that I found, interestingly relevant as well. Just going to touch on them, sum them up for you, and then link them below in the description. So if you found them very interesting, you too can check them out for yourself and corroborate this information. So here we go. Basically, Bitcoin mining is potentially in decline, which is according to its chip maker as they slash their targets for Q4. You can see this is coming out of the Taiwan Semiconductor Manufacturing Company. The growth target of 79%. That would be great for between 7 and 9%, substantially smaller. It was slashed down to 6.5%. So still not a horrible increase in sales overall, but definitely not what they were expecting. 6.5% does keep up with inflation in most developed economies, so they're assumingly not hurting too bad. And given that this was a similar environment in which Bitmain, back in 2014 and 2015, they were able to consolidate their operations and become the predominant crypto mining giant that they are due to the relative compression in crypto price after a meteoric rise previously in 2013 in the Mt. Gox cycle. So keep in mind, this does have some historical precedent, but while history may not repeat, it definitely rhymes, I believe they say. Love that quote. So yeah, just something to keep an eye on. And speaking of electricity, that's one of the biggest inputs, probably the biggest input for cryptocurrency mining, just period. That's what you need. You need energy, you need the tech. And that's something Japan is seeking to get into as well. And this isn't some small company. This is the Kansai Electric Power, which is one of the two largest electric power companies in all of Japan, and the Mitsubishi UFJ Bank, which is the largest in Japan. So they're the ones bankrolling one of the largest electricity providers to test blockchain trading of electricity. I'm immediately reminded of Power Ledger. Power Ledger is a company based out of Perth, Australia. They're doing essentially this. They allow individuals who have energy from their sustainable energy machines, so wind power, solar panels, water power, hydroelectric, that sort of thing. Individuals who own that can then tokenize their energy on the Power Ledger system for power tokens and trade that amongst themselves, which is a great way to allow for a level of free market flexibility and applicability for energy allocation, the building block of human activity. So really cool stuff coming out of there, guys, and I wish the best of luck to Japan. I need another simultaneous sip. Clear my throat there. All right, so let's go ahead and get into another interesting, applicable news story. The Gates whoa, Coin Insider going crazy. All right, anyway, that didn't happen before. The Gates Foundation has added a blockchain startup Coil to the Interledger protocol, which is something that they've been working on for a while. The Gates Foundation, Bill and Melinda Gates, if they sound familiar, they're kind of big deals with Microsoft. They partnered with Ripple. I'm not sure if it's a partnership. They started working with Ripple way back in 2014, helping to install something called Mohaloop, which is really neat. Mohaloop is their cryptocurrency / blockchain / distributed ledger technology project that seeks to support pro-poor payment solutions. That's coming from Miller Abel. He is the deputy director over at the Gates Foundation. So what does this mean? Basically, brick and mortar infrastructure for banking is too expensive, way too expensive to set up. It just doesn't make economic sense in a lot of places around the world, especially in places like Africa and the Middle East, where these are large brick and mortar buildings full of capital. If this region has any geopolitical contention whatsoever, it may well be a negative return on investment to build these structures. So realistically, this has relegated these regions to using digital payment long before digital payment was the chic new cool thing. This means that 67% in Kenya, for example, use their mobile phones as their primary means of banking. This means there is a huge market relatively familiar with digital payment, and that's becoming the new thing in vogue, and it could potentially empower individuals who previously they relied on the central servers of these central financial institutions to access via their mobile phones. Well, now there's a distributed alternative that can empower billions worldwide. So that's really cool. Big shout out to the Gates Foundation for doing great work like that. Looking at the time, guys, I think we're coming up on time here. Just 2 more articles I'll just mention. Floyd Mayweather and DJ Khaled are being sued over crypto scam. Centra, they participated in that. Just wanted to show this funny picture of Floyd Mayweather with the Centra card. So yeah, that's a good article. Just goes to show, do your own research and protect yourself. Make sure you know what you're getting involved with. And also, Monero's fees are dropping by 90%, which is super cool. They had a hard fork recently. They've kind of been hard fork happy, some individuals in the space are saying. After all, they forked away from the ASICs a while back. But this one is assumingly universally celebrated. After all, a fee drop of 90% is a huge, huge deal. And being that they are one of the leading privacy currencies, using what's called Ring CT, which basically gets a group of people together, and it does what's called plausible deniability, meaning that everybody could potentially be the sender of that transaction, which, because everyone's doing this, it sufficiently obfuscates the entire transaction history of the chain. So really cool stuff. Like I said, everything below in the description. For now, this is Paul signing off. We're going to go ahead and transition into the happenings for October 22nd and 23rd. For Monday, October 22nd, we have the Sibos 2018 conference happening in Sydney, Australia. We have the Linux Open Source Summit Europe happening in Edinburgh, the East-West Cryptobridge conference in Frankfurt, the Crypto Invest Summit in LA, Swisscom Blockchain Academy happening in Zurich, Switzerland, the World Digital Economic Forum is occurring in Geneva, Switzerland, On the Move Malta is happening where else? Malta. And of course we have the Wolves Summit, which is happening in Poland. That's it for Monday, October 22nd. For Tuesday, October 23rd, we have Blockchain and Bitcoin Conference, the roving blockchain conference that moves all around the world, happening in the beautiful island nation of Malta. We have the Solar Asset Management Europe Forum happening in Milan, and CoinAgenda Global's kicking off in beautiful Las Vegas. Get your gambling as well as your crypto conference fix. That's all we have for October 23rd, Tuesday, and for this Crypto Coffee update. Seriously, thanks so much for watching, guys. I had so much fun with this face reveal. It was fantastic. Look forward to more of Paul's big head in the future, not in terms of ego, just in terms of proportions. But yeah, so I'll be there. Much love, guys. Thanks again for watching. We are Cryptide, and remember, the tide is rising. Along with the view count, yes!